Today, financial pressure reports for May 2024, Chapter 2, Owner-Occupiers and Mortgage Stress. Hello again, this is Martin North from Digital Finance Analytics, Adelaide post covering finance and property news. So this is the second in a series of posts that we are making with regard to the May 2024 analysis from our surveys. If you want to know more about how we do what we do, then check out the previous show, the overview, where we explain in detail the way that we calculate the stress analysis. And I will say that I'm changing the approach this month. Rather than trying to run it all live and cover it quickly, we're going into a little bit more deep dive and taking a bit more time to do that. And also the final show in a few days' time, we'll be able to look at individual postcodes. So if there is an individual postcode that you'd like me to analyze, then you can put it in the comments below and I'll try to get to it later on. So let's just look at how this show fits. We did the overview of May previously. Now we're looking at mortgage stress, which is this show. The next one will be on rental stress, after that investor stress, overall financial stress, and the final show in the series will be the viewers' requests, where we can do the postcode analysis. And I will just remind you that we do provide a one-to-one service if you want to deep dive an individual conversation about a particular suburb. Can't give you specific financial advice, but we can look at the various elements within my data sets and look at the underlying trends. We can look at home price trend data and also look at price trends and where things may go based on our modeling. And you can book a time for that. It's an hour or so by Zoom or a phone discussion. There is a cost involved simply because there's a lot of work to do to put this together. And we're booking 3 to 5 weeks ahead. If you'd like to book a spot, go across to the blog and contact me via the DFA blog. So we define stress in cash flow terms, money in, money out. And we showed already that rental stress is as high as it's ever been at 77.07% of households. Mortgage stress is at 51.3% of households. That's as high as it's ever been, much higher than back in February 2020 before COVID. And the story continues, unfortunately, with higher levels of stress. So let's now look in more detail at the mortgage stress data. I'm going to start by looking at the postcodes, the top postcodes across the country. Now, this is looking at mortgage stress based on the total count of households in a particular postcode that has mortgage stress. We could do it in percentage terms, but as I've explained previously, I think that the big numbers and the rule of big numbers is the most important. So mortgage stress here, the postcode with the highest level of mortgage stress across the country in May was postcode 2170, which includes the areas around Liverpool, Liverpool South, Mount Pritchard, Prestons and Warwick Farm, with more than 13,200 households in mortgage stress. Then we go to Western Australian postcode 6065, which includes Wanneroo and Tapping, with more than 11,900 households there, at 82% of households in that particular postcode. And then we come back to Campbelltown postcode 2560, where we've got 11,500 households in stress, and pretty much everybody in those areas are actually up against it in terms of cash flow. That includes Campbelltown, Gilead, and a bunch of others too, including Limar and Roos. Then we go to Toowoomba, postcode 4350, and that's quite a big postcode with 47,000 households in the area. So it's actually the largest household count. But of that, 10,600 are in mortgage stress at 72%. And I should just make the point there that the percentage is the percentage of mortgage stressed households who are borrowing, not all households. Then we go to postcode 3805, Narre Warren, Fountain Gate in Victoria, with 9,600 households in mortgage stress at 96%. And then another postcode in the same sorts of area, 3029, including Hoppers Crossing and Tarnit, with 9,600. And another one, postcode 3810 at Pakenham, with 9,600 households. And then Roxburgh Park, postcode 3064, which includes Craigieburn and Donnybrook. And again, quite a large number of households there for 44% in mortgage stress. Then we come back to New South Wales, Camden, postcode 2570, with more than 9,000. Another postcode in Victoria, 3806 Berwick and Harkaway, with more than 8,800. And then Ballarat, postcode 3350. So that's a regional centre again, with more than 8,700. Riverston and Oakville and Vineyard in New South Wales, postcode 2765, with more than 8,400. And postcode 4306 Pine Martin, and quite a few other areas, including Blackbutt and Ironbark, with more than 7,900 households, and again, a high proportion in stress. So that gives you the top postcodes. Now, there's another way of looking at that, though, and that is through the stress mapping that we can do. And the thing about the mapping is that it actually gives us a quite useful way of showing you where the problem is. Because, of course, mortgage stress is not equally spread across the whole of the country. As we saw in our previous show, it also touches different types of households at different levels. So we'll start the mortgage stress mapping analysis with the postcode 2000 and the surrounding areas. And what we show here is that we have the counts, where the lowest counts are in blue and the higher levels of count are in yellow, orange and red. And you can see as we pull out that in and around the city, the counts of those in difficulty are relatively low on an absolute basis. But it's worth noting that Vaucluse and North Bondi and Randwick and Cremorne and Neutral Bay and places like that, and Strathfield and Concord are in yellow. And that's worth noting because shortly we'll look at the other way of looking at it, which is the percentages. And as we pull out on household count, you can see really that the levels of stress close into the city are quite small. But as we pull out more broadly, we can start to see areas of orange and red. And we see that the story with regards to Sydney is the east-west split. Western Sydney, from the Hawkesbury in the north down through Liverpool and Camden and Campbelltown, is quite different from those around the city. But now what I'm going to do is to look at the same information but in percentage terms. So this is the proportion of households in difficulty. And this makes us look at it in a slightly different way. The first observation is that there are lower population counts in some of these more affluent areas, but nevertheless, there's quite a high proportion of those in mortgage stress. So, for example, Vaucluse, Bondi Junction, Neutral Bay and Cremorne, Hunters Hill, and even places like Ashfield are registering as a quite high proportion of those in difficulty. Now, quite often it's because a lot of people in these areas have very large mortgages, are very leveraged up, and whilst they've got quite big incomes, nevertheless, they have cash flow pressures. And as we pull out from this area, we can see that there are other areas too, Strathfield, of course, and as we pull out further, Chester Hill, and then Liverpool down towards Botany as well. So you start to see the same sorts of trends, but in percentage terms, the variation between the west and the east around Sydney is rather different from the normal view of just household counts. And this is one of the reasons why some of the default levels that we're seeing are in areas closer to the city rather than over in the west. And I've had the view for some time that these percentage impacts mean price risk for the high counts relative to the others. And that's one of the drivers that drives our analysis as we look at it. Now I'm going to look at postcode 3000, and this is now back to the household count. And once again, what we find is that closer into the city, things aren't too bad. But as we pull out, we soon start to see some of the pressures in and around Melbourne itself. We see to the west in the Wyndham area and beyond, and also to the north, and also to the east as well. And as we pull out, we can see there that places like Casey, postcode 3806 and 3805, to the north 3064 and 3029 are actually registering. Remember that this is the count of those in mortgage stress. And we can even go out to places like Ballarat and we can see that there's a significant set of pressures there. So basically, to the north, to the east, and to the west, and also in some regional areas in Victoria, we're seeing pressures. But again, if I then move to the percentage of stress analysis, you can see there that there are higher proportions in close to the centre of Melbourne, with percentages that are significantly above the average. And as we pull out, we can see, somewhat similar to what we saw in Sydney, that there are some areas where the density of population is lower, but nevertheless, the impacts are quite significant. So Moonee Valley, of course, but also Kew East, for example, 3102, Thornbury, 3071, and Armidale, 3143. And as we pull out further, once again, we see a little bit of a different patterning, still significant pressures, but the proportion of people in places like Wyndham, for example, is lower than the absolute count in mortgage stress. So it is an interesting observation that there are some correlations, but some differences. So not surprisingly, places like Casey are registering on both counts. And as we pull out further to the north and to the east, we can see quite significant pressure points. But it does give us a slightly different take, and also show that some of those areas down towards Geelong are impacted as well. So in the way, the percentage view does give us quite a good alternative perspective. Now I'm going to look at the mortgage stress household count for the Brisbane area. And again, we start with the number of households. Now the population density in Queensland is somewhat lower, so you'd expect to see less in the way of the dark reds, more yellows and oranges. But as you pull out, you can see that areas like Camp Hill and Carina, and also going out to the west towards Ipswich, are registering. Closer in, not so much of an issue. And you can see there that as we go down towards Logan and then towards the Gold Coast, in the yellows, so there are levels of stress, but the absolute count relative to Sydney or Melbourne is a little lower. If I then look at the same analysis, but this time on a percentage basis, we see a rather different story insofar that some areas like Windsor, 4030, for example, stands out as a highly pressurised area. Others, not too bad, although Camp Hill is again registering. And then we come out to postcode 4154, and in the Ipswich area and Salisbury as well, we're up in the reds. So we have a lot of households in these areas that are under significant pressure. Again, areas of red suggest to me price falls rather than rises are more likely to play in if we look in these particular postcodes. And as we go down towards Logan and the Gold Coast, we continue to see areas of red where there are some areas where, once again, we are going to see considerable pressure. Again, this is the percentage view. So this is how many households in percentage terms have cash flow issues with a mortgage. Now I'm going to switch to Adelaide, and we're going to look here at mortgage stress household counts. Once again, this is the number of households. And close into the centre of Adelaide, well, there's a little bit of pressure, but it's not too bad. As we pull out, we can see that there are a few areas where we're moving into the yellows, and both to the north and the south of the CBD, there are some hot spots. But again, the population density is quite a lot lower than we saw in Sydney and Melbourne. And we go up towards 5108 in the Salisbury area, and that stands out as one area where there are considerable pressures. Now, if we look at the percentage story, again, it's a rather different story, because here what we're seeing is areas like Richmond 5033 and Raynham 5070, where we have a high proportion of households with cash flow issues. And in fact, for the Adelaide area, places like Fulham Gardens and Fulham and 5024 register as well. And as we pull out, we see quite a number of areas, Sefton Park, for example, and West Lake Shore, 5020, and further south down towards Glengarry, 5043 and 5044, and some up there as well in the Ashton area and Norton Summit up in the hills. So once again, the story in percentage terms does highlight that there is significant pressure in some areas for some households. And it's worth just reflecting that in percentage terms, we see the same story in some of these smaller centres, as in Sydney and Melbourne, where there are lots of people up against it. Now we're going to move to Western Australia and look again in count terms at mortgage stress. And again, close into the centre of Perth, there are a few hot spots, but nothing too much. Church Lands, 6018 stands out. Again, the population density is somewhat lower than other areas. But as we pull out to the north and to the south, we do start seeing some signs of difficulty. And in fact, postcode 6065 stands out in the Wanneroo area to the north, and also then to the south as well, 6112. And as we pull out further, we once again see significant pressure in some areas. A lot of it tends to be down the coastal strip where there are lots of new developments and home and land packages. Mandurah is just showing there at the bottom. Now, if we then switch to the alternative view, this is the percentage view of mortgage stress. And as we pull out, well, maybe not surprisingly, Church Land registers there as a percentage higher. But there are a few other hotspots, City Beach, for example, and to the north, Westminster 6061. And interestingly, that Mossman Park 6012, which of course is a lot of expensive property there, quite a few people have difficulty with cash flow. And even on the south of the shores there in Ferndale and Shelley, we're seeing some similar stress levels too. And as we step out, Wanneroo, of course, registers there, as you perhaps expect. And you can see other areas where a lot of people are under pressure. I'll also make the point that over to the east, inland, we've got large areas there with some pressure, but of course the population density is very low. So that's why we have to be a little bit careful with this. But again, postcode 6036 and 6030 up on the coastal strip are registering quite severely. And if we pull down towards Rockingham and go down towards Mandurah and places like that, again, there are a number of areas where we have quite a lot of red. And finally, we're going to look at the household counts in and around Hobart, Tasmania. And again, the population density is a lot lower. So as you perhaps would expect, the colours are more towards the blues and yellows than they are to the oranges and the reds in and around Hobart. But again, some variation and some pressure in some areas. Maybe no surprise. But the story is a little different if we then look in percentage terms. Again, highlight the fact that the percentages are on relatively low counts, but you can see both to the north of Hobart up towards 7009, as well as Cambridge 7170, for example, we have high proportions, and even Collinsvale 7012. And as we pull out a little bit further, we can see that there's quite a big variation between those to the north of Hobart and those to the south. And just to close out this particular set of discussions specifically relating to mortgage stress, we'll also look at the default data from the maps as well. Just before I finish this show relating specifically to the mortgage stress, it's worth just taking a moment to look at the default data as well. So here we have the risk of default sorted by the top postcodes. And you can see here that the postcode with the highest risk of default over the next year or so is postcode 3977, Cranbourne in Victoria, with 962 households at risk. That's 4.3% of those borrowing. Then we go across to Mandurah, Western Australia, 6210, with 712 households at risk. Then Hoppers Crossing, postcode 3029, at 693. And then we go to Western Australian postcode 6112, including Armidale and Bedfordale, with 659 households. back to Roxburgh Park and Donnybrook and Craigieburn, postcode 3064. Then Western Australian postcode 6164 success, followed by Bundaberg up in Queensland, 4670. And here we have more than 5.5% of households risking default over the next 12 months with 584. Then Gosford on the Central Coast, 2250, over 5% and 583 households. Toowoomba, postcode 4350, 517 or 3.5%. Point Cook, Derrimont, postcode 3030, 502. Wanneroo, postcode 6065 with 501. And then Coomera, postcode 4209 up in Queensland. And Mackay, postcode 4740 with 441 households or 3.4% risking default over the next 12 months. So that's the top ones. We can also briefly look then at the mapping. And the mapping, of course, gives us a different view of what's going on insofar that, once again, it's a patchwork quilt story. So if we start looking at the risk of default in and around the Sydney area, we can see that close in, the counts are relatively low. But as we pull out, we start to see some minor variations. Again, the oranges are the higher and the yellows and the blues the lower. But the overall default story in the New South Wales area isn't too bad. Very different from the Central Coast. As I said before, Central Coast stands out as a risk area, and it's one that really is explained by people moving up the Central Coast to sea change, perhaps highly leveraged up. There's also quite a lot of new building going up there, so home and land packages and a few other things. And wages growth is stagnant up in that area at the moment, so that's another factor that's putting pressure on households. Story in and around Victoria, and particularly the centre of Melbourne, is somewhat similar insofar that there are some risk of default. Again, not huge counts, but over to the west in the Wyndham area, that's a particular hotspot, and we're actually seeing some forced sales in that area even now. Also to the north in postcode 3064, and then down in the Frankston area, there's a significant set of pressures there. A little bit of pressure over in the area where we've got those high levels of mortgage stress, but default still hanging in, and a little bit in Ballarat. So the default rates in the Melbourne area are relatively low. One of the factors here is that more people are actually deciding to sell and get out before they're foreclosed. I think we'll see more of that in the months ahead. The default mapping in and around the centre of Queensland, and particularly in Brisbane, relatively low. But again, as we pull out, we can see that there's a little bit of variation. And to the north and to the south, the counts are a little higher, but not into the sort of the reds. Again, it's partly the population density, but the postcodes that are actually being impacted, like 4300 and 4207 down in the Gold Coast, is where some of the defaults are actually sitting. And we've got some particular hotspots down in the Gold Coast at the moment, and also to the north as well, postcode 4510, for example. So there is a bit of a spread. Interestingly, in the Ipswich area, where there are high levels of stress, as we saw, the defaults are there, but still not that high at the moment. If I then go to Adelaide and look at the postcode there, starting from the centre of Adelaide and drawing out slightly, you can see there that the relative defaults are quite low, 5023, and then 5085, 5043 stands out. Again, population density quite low, default levels relatively low at the moment, but worth keeping an eye on these because there are some potential trends that I think we'll be watching over the next few months, especially if interest rates stay on the high side. Then we go to Western Australia. Default risk here is somewhat higher than many expect, simply because of the very high levels of price earlier on, then came back and are now rising again, but incomes aren't following. And so we do have areas where there is quite a lot of pressure. Again, the population density means that the counts are relatively low, But it is interesting to note that places like Wanneroo stand out 6065, and then to the south, postcode 6164, for example. And so it goes on. And even down in the Rocknam area and below, there's an issue. Mandurah is red. It's the one that I keep coming back to. There is a significant set of pressures in Mandurah, but this actually relates to decisions that were taken in 2010, 11, 12, 13, rather than recent decisions. People bought down there, leveraged up, prices fell back, and whilst prices have risen again, they're still somewhat lower than they were. Quite a lot of investment properties here are not washing their face, and so there's quite a lot of pressure being seen and therefore risk of default rising. And finally, if we look at Hobart, we can see there that in and around the centre of Hobart, not too much to see. Again, population density is quite low. As we pull out, not too much in the way of defaults in the months ahead. But nevertheless, it's one to keep an eye on because we have seen prices ease back. But of course, prices in the Hobart area are still relatively low relative to other parts of the country. So that does protect that particular area a little bit. So we've pretty much come to the end of our second show, which is looking at mortgage stress. And in summary, we are seeing mortgage stress rise. We're seeing it in a lot of high growth areas, particularly the home loan packages, the first time buyers, but also other more affluent areas too. And the lens of count versus percentage is also quite interesting because it does give you a different feel for what's going on. The general point I would make is that where we've got high levels of stress and or high levels of risk of default, those are areas where prices are going to be wobbly in the weeks and months ahead. And I do think that Victoria is one particular hotspot in that respect. So that brings us to the end of this show. Our next one, which will be out tomorrow, will be covering the rental sector. And that is another very painful story. So watch out for that. And as I've said before, if you're interested in seeing a particular set of analysis for a particular postcode, put it in the comments below and I'll try and pick those up and include it in the last show in the sequence, which will be in a few days' time. Alternatively, if you want to get hold of the data, you can also send me a message via the DFA blog and I can send you the one page, no charge. I'm Martin North from Digital Finance Analytics. Many thanks for watching and I'll see you again next time.